Good morning, Honorable Chair. I rise to report that the quorum does exist for the Standing Committee of Public Enterprises, Commerce Business.
Thank you so much, Honorable Clerk. It has been reported that the quorum does exist for the Standing Committee on Public Enterprise to commence business. Those in favor, please say aye. Aye. Those not in favor, please say no. The ayes have it. Thank you so much. Can someone move a motion for us to adopt the agenda with either amendment or the way it is?
There is no amendment. I move that the agenda item be adopted as it is.
Any second that?
Yes, I second the agenda item.
Yes.
It has been moved and seconded to adopt the agenda as it is. Those in favor, please say aye.
Aye.
Those not in favor, please say no. The ayes have it. Thank you so much. May I seize this opportunity to extend a warm greetings to the senior management of Nawec, the senior management of Nawec, the representative from the National Audit Office, subject matter specialists, support staffs of this committee, and honorable members here in presence. I greet you all with morning greetings. It is indeed a great pleasure for us to reconvene and welcome our partners in the National Assembly of the Gambia. We are indeed very much happy to be with one of the largest PEs in the country, that is Nawec. As I still want to emphasize my previous position that we are partners in development. One thing, we have different mandates. Though we get our authority from the electorate, that's you people who voted us to come and represent you in the national bandaba of this country. And again, you also that are in this particular noble institution, you have a mandate to provide a specific service, a qualitative service to the Gambian public in terms of production of water and electricity. And also a mandate where, if necessary, maximization of profit and paying dividend to our consolidated revenue fund. And that of recruitment, as you might be aware, among all the 13 state-owned enterprises on our purview, you have the largest staffing. So we still believe that you can extend depending on how liquid you are going to be. Today's meeting, as you are aware of that, you are invited to come and present your 2020 activity report, management letter, and the financial statement before the committee, after which we will select a date for us to appear again for a consideration. So we are indeed very much happy. As I earlier stated, we are partners in development, and we believe this relationship will continue from strength to strength. Sometimes during our interface, there are issues that may emerge. We can be very heated sometimes, but that is all just to us putting the institution on a firm footing. It's not a witch hunting exercise, but it's an exercise that is trying to put the institution on a firm footing. So on that note, I thank each and every one of you. Going forward, next on the itinerary, that is the introduction. I will start with my humble self. I'm Honorable Lamin J. Sane, hailing from the southern part of Burkama, which stretches up to the famous Dar es Salaam, where I think most of you will be. You are aware of the invasion, encroachment by the Senegalese authority yesterday. And this has been a song that I've been singing for the last 7 years. So I believe the authorities will do everything humanly possible to make sure that we address this problem amicably. Next summer.
My name is Honorable Samba Jallo, member for Nyango.
My name is Almame Jiba Fonyi, Councillor.
Good morning. My name is Ibrahim Jao. I'm a clerk to the committee.
Good morning. I have your Makal, subject matter specialist of the PEC committee. Good morning. My name is Bubakar Njalo, representative from the National Audit Office.
Thank you so much. Can we hear from the board chair and the team from the Nawec?
Good morning, Honorable Chair, honorable members. My name is Crispin J. Johnson. I'm the chair of the Nawec Board of Directors.
Good morning. I am Nani Juara, the Managing Director Nawec.
Good morning, everybody. I am Kumbo Toure, Vice Chairman, Nawec Board.
Good morning. My name is Idris Ajajo. I'm the Deputy Managing Director of Nawec.
Good morning. Good morning. My name is Tijan Williams. I'm the Group Director for Internal Audit.
Good morning. My name is Madeleine Sambu. I am the Senior Manager for Regulatory Affairs.
Did you have used the order?
Next one.
Good morning. My name is Muli Diallo, Good Customer Service Director now.
You can move it. Yes.
Good morning. My name is Marley Robert Saley. I'm the Chief Operating Officer for the Water and Storage Business Unit.
Good morning. My name is Betty Maron. I'm the Finance Director.
Good morning. My name is Nene Jai, board member and chair of the Finance and Audit Committee.
Good morning. My name is Abiota George. A partner with Next Year Pace Consulting.
Good morning. I am Paul Gay, Managing Partner, Next Year Pace Consulting, external auditors for Nawec.
Thank you so much for the wonderful introduction. This has been a settled practice so that we can know one another, not only by name, but we can recognize by face too. That is why in almost all of our gathering, the issue of introduction is very key. Previously, probably last year when you appeared before us, we have a different board chair. And today is different. And I want to seize this opportunity to congratulate you for the responsibility that is bestowed on you. And we hope and strongly pray you will live up to expectation. Going forward, some of our members, as you might be aware that we are on committee operations, some of us are into a lot of committees. Myself, I'm into 5 committees. So some of them will be coming late. The membership is up to 9. Some are also on international duties. But nonetheless, as far as our standing order provide, if we have 3, that suffice a quorum and we can go ahead. So that is why we are going ahead. Next on the itinerary is going to be administration of affirmation. So anybody who is going to do a presentation or is going to be talking will be given that opportunity to administer that administration of affirmation also. So the clerk will be coming around to take you through in this process. So like if any of you who is going to make a comment or you are going to present, you can stand up, we do it together, all of you, instead of doing it one by one.
Do hereby affirm that.
Do hereby affirm that.
I will speak the truth.
I will speak the truth.
The whole truth.
The whole truth.
Nothing but the truth. So help me God. So help me God.
Thank you so much for the compliance with the senior management. Honorable Board Chair, as you may be aware that when you are seated before the National Assembly, especially in this committee, we confer this honorary title on you. The prefix that is also given to us by you. So, going forward, we want to we want to go straight to the business and start the presentation. Starting with the activity report. I don't know whether you have a summary version of it. As far as we are in receipt of all the reports, we'll go through this thing and prepare for consideration. But we can go in for the summary version of it in the activity. And going forward, management letter is going to be management letter. When we come there, they will take us through areas where the auditors will take us through areas that are highly risky in nature. So we want to start with the activity report. Yes, if you don't have a summary version, you can also guide us by quoting certain pages where you want to go to. But we want you to summarize it as much as you can.
Can I just say something?
Honorable Chair.
Can you give it to the board chair to respond before you start? It's the focal parties. The honorable board chair is the focal party.
Thank you very much, Honorable Chair. It's always an honor for us to be here and to sit in front of you. We thought maybe we should give you a little bit of a context. The environment within which we have to operate in the years 2019 and 2020. With your permission, I would like to do that first before we delve into the business of the day.
Okay, go ahead.
Thank you. The year 2020 has been critical due to factors such as the COVID-19 pandemic, which led to delays in the implementation of some projects. We are proud to inform you that Nawec is moving in the right direction towards achieving the sustainable development goals, thanks to Gambia's promising democracy and improved transparency in the management of public resources, and the goodwill of our bilateral and multilateral partners. Consequently, we have seen a renewed interest from the private sector to invest in the energy sector. The board recognizes the potential and the zeal of the Nawec management and is optimistic that in the medium to long term, our collaborative efforts will make investments in the electricity worthwhile, as good returns to be attracted for prospective investors. The COVID-19 had an impact on electricity use in Gambia in 2019 and 2020. It had an observable effect on demand in the year as people were likely indoors and needed more electricity and water services in their homes. The electricity demand increased as the pandemic continued to ravage society. Nawec had to take actions to help mitigate the crisis, such as distributing standby tanks filled with water to various communities to ease access and improve hygiene. On the electricity side, whilst COVID-19 had an increased effect on demand, the impact of unplanned shutdowns continued to play a role in the management of the supply chain, as issues faced during the summer of 2020 had a knock-on effect on the maintenance schedule of generators across the power stations. These delays had a noticeable impact on the availability of power supply capacity in 2020. Safeguarding the welfare of our staff was prioritized over the last 12 months due to the pandemic. Stringent hygienic measures were put in place, and hand washing and sanitization facilities were put in place for all. This was extended to all Nawec customer service centers, and social and physical distancing was encouraged, together with the wearing of face masks as an added measure. A mix of on-site and at-home work was also employed to maximize the staff output. Among key priorities of the board were to close the generation capacity gap, improve investment in the transmission and distribution network, expand the energy mix and access, reduce loss, retire old engines, among other areas of intervention. In conclusion, I wish to thank His Excellency the President of the Republic for not only reposing this great confidence in my person, but also providing the enabling environment for the board to operate with limited government interference. Thank you very much, Mr. Chair, for your attention.
Thank you so much, my honorable board chair. I just want to request a statement you made, whether you have a copy of it, so that we can also look at it. Later you can provide us with a particular statement. You can, next we can go into the presentation of the activity report.
Thank you, Mr. Chair. I'll ask the Managing Director of Nawec to go ahead and do a presentation of the activity report.
Thank you. Welcome.
Thank you very much, yeah. Probably we'll start from the electricity business report page 15, 16.
15, 16.
Yeah. As you know, Nawec is mandated to provide both water and electricity service countrywide. So for the electricity business unit, it comprises both the transmission and also the generation component of our business. In 2020, most of our power supply was coming from car power, the IPP, which is the vessel that we have stationed in Banjul here. Provided up to about 49.07% of our power supply in 2020, whilst Nawec provided from its own generation sets a total of about 47.25%. We got limited supply from Senelec in 2020, for the fact that only the provincial areas were connected to Senelec, which is the opposite today. But this is the main highlight in 2020, as most of our productions were definitely coming from our own local electricity, includes power. 2020 also have seen an increase in our generation capacity after the commissioning of Brikama 3. It was funded by the Islamic Development Bank as part of the efforts by Gambia government to increase the generation capacity locally. This was a loan that was contracted on behalf of Nawec by the Gambia government, and in 2020, to be more precise, in November 2020, the plant was commissioned, and this has added another additional 20 megawatts to our generation fleet. These gensets are brand new, and the contractor then was STX Heavy Industries. They were a contractor and they have done a fantastic job. Thank you, Chairman. You hosted us, right?
Yes.
Yes, thank you very much for giving us the opportunity to utilize part of your land in Brikama South. Thank you, we are grateful for that. And it has really helped to stabilize the electricity supply in country in 2020. And I think we were all witness to that in 2020. After the commissioning of the power plant, we have seen relative stability in our electricity supply. In terms of transmission and distribution, that has always been a challenge and continue to be a challenge. The network is really old, and we are making efforts, but in 2020, not much effort has been made for the fact that we are hoping that some of the projects will have kicked in 2020. But unfortunately, those projects, the contracts were inside at the time. So in 2020, most of the activities that were undertaken in 2020 were mainly from Nawec's own budget. So we did some rehabilitation of the network by replacing some of the bare conductors, which were, the LV bare conductors were, there for many, many decades, had to be replaced. And also, we have done some interventions in installing some new transformers in areas where we were experiencing a lot of low voltage as a result of increase in demand. Some of those secondary substations were overloaded, so we have to install new transformers to reduce the length of the lines and also reduce the load that is on the existing transformers. That has helped us in not significantly to reduce our technical losses. Of course, not very significantly, because to reduce technical losses, you require heavy investment, which is currently underway as we speak. As part of our loss reduction efforts, we have also constituted, which has been around for some time though, but we reinforced our loss reduction team, which we call revenue protection team. The main mandate of this team is to go after those people who tamper with our electricity or water meters, those who do illegal connections, to make sure that we reduce our commercial which we call non-technical losses. And that activity has also been very prominent in 2020 and continue to be as we speak. We can now go to page, just a moment, page 34. Page 34. Water. In 2020, just like today, Nawec is still faced with a lot of challenges when it comes to water supply, meeting the demand of our customers. It has not changed significantly since 2020. I think the situation still remains, or even getting worse, as a result of the level of urbanization that we are all experiencing. The population growth within the GBA is really causing a lot of pressure on our service delivery when it comes to water supply. 2020, the main highlight in 2020 was the signing and the implementation of the Indian line of credit, which is a $22.5 million project. Basically to replace the old asbestos network within the GBA and also some parts of the provinces. That project, as we speak, has fully been commissioned, and Nawec is operating and maintaining as we speak. This has really relatively helped to boost the production capacity because new boreholes were also drilled, and the asbestos pipes, which were also a serious concern to the government and also Nawec, were replaced. So as we speak, those boreholes are in operation, and the project is commissioned. Customer service, page 38. Well, this department is the one responsible for our customer service. That's really our relationship with our customers. And mainly their focus is on billing, providing new service connections to our customers, and also providing all the necessary customer service activities that they need to do on behalf of the company. The billing department during this period have seen a transition. We are trying to move from an old standalone system to a new IMS system, which is an integrated management system that has been funded by the World Bank. This 2020 was the beginning of the implementation of the IMS system. As we speak, that system is fully functional. It was commissioned in 2021, to be precise, in October. So during 2020, the customer service, together with the rest of the departments within the company, were very busy with the implementation of the IMS, which has always been a challenge. Billing and other IT infrastructure in Nawec were all standalone before 2021. 2020 has seen the beginning of the implementation of the new IMS system, and the department has been fully involved in this. Because the department is also responsible for our prepayment service. So therefore, the system that was being built, their contribution was very significant in the implementation. Corporate service department, that's where the IT sits. Basically, they were the ones spearheading the implementation of the IMS project. During 2020, the department initiated a lot of activities under the IMS. Of course, we had some setbacks during the implementation for the fact that the data collection was not fully completed, and as such, activities were not fully completed in 2021, and 2022 was the period that most of the activities were covered. But nonetheless, the IMS team, the project team, did an exceptional job where most of the data that were required were provided to the consultant, and the implementation was really well coordinated by them. So, in terms of governance, I just want to highlight that the board in 2020 were able to approve the new structure for Nawec. Because 2020 was the highlight of Nawec's, the start of Nawec's reform agenda. And the board of directors have approved a new structure for Nawec, where we were able to recruit new group directors, and the structure has also evolved over time, because in 2020 we had about 9 directorates, but in 2020, after the restructuring, the number of directors have been reduced from 9 to 7. And that has seen the merging of some of the directors into one business unit. Mainly the electricity business unit was 2 at the time, the generation and also TNT. But these 2 departments have been merged into one business unit. Our provincial operations were also merged into the respective business unit, that's electricity and water. So now we have only water business unit and also electricity business units covering the length and breadth of the country, rather than having a special directorate for provincial operations. Just to say that it has not been easy, just like what we are going through right now, meeting the demand and expectation of the people in 2020 in terms of both water and electricity supply. But management has put a lot of effort to make sure we meet the minimum expectation, because I think 24 hours was really a big challenge for all of us to provide 24-hour electricity supply. But at least relatively, most places were enjoying good supplies in 2020. And in terms of providing access, I think the people of Kiang were also very happy in 2020. For the first time, they had access to electricity through the support that we got from the Indian line of credit. We've expanded to the Kiangs. And that project covered almost about 77 communities, both within the West Coast and also Kiang. And for the first time, our brothers and sisters in Kiang have also seen electricity, thanks to the Barimukas. Thank you very much, Yaman.
We also thank you so kindly for that exciting presentation of the activity. I just want to assure you, as far as Bretagne is concerned, we will always contribute our quota in the socio-economic development of this country by either provision of land, if we are needed. But my worry here is, and my challenge here is, how do we bank land for future borehole drilling? Because that's a major obstacle as far as the GBA is concerned. The level of improvement has gone to a certain level. If we are not extra careful, we will find it difficult to provide safe drinking water to certain communities in the GBA areas because of scarcity of land, no policy. But that is taking it on another level by a different ministry that has to partner with your minister and make sure these are put in place in order to provide future borehole drilling. All right, thank you so much. Going forward, we would like to have a presentation on the financial statement.
Thank you, Honorable Chair. With your permission, I would like to ask Group Finance Director, Ms. Betty Marong, to do a presentation on that issue.
Thank you, Mr. Chair. Good morning, Chairman and honorable members and external auditors, representative of the National Audit Office and my colleague directors. I will start the presentation with your permission, Chair, with the income statement.
Okay, income statement.
That's page 14.
Okay, you may go ahead.
Thank you very much. So in 2020, the revenue from sale of electricity and water amounted to $4.1 billion compared to $3.8 billion in 2019. Other operating income amounted to $45 million compared to $29 million in 2019. Direct costs. Fuel and lubricant expenses in 2020 amounted to $1.4 billion. In comparison, for 2019, the amount was $1.3 billion.
Is it in negative form?
It's just a presentation, it's the cost.
Okay.
Energy purchased from third parties, that is the IPP that the MD mentioned, but also the imports from Nawec. In 2020, it amounted to $1.6 billion compared to $1.9 billion in 2019. Materials for service connection, which is the materials used to connect customers for both electricity and water. The cost amounted to $184 million in 2020 compared to $80 million in 2019. Other materials and services, these are direct materials for operations, amounted to $128 million in 2020 compared to $113 million in 2019. A combination of the revenue and the direct cost gave a gross profit, that's the gross profit from operations, of, gross profit, yes, of $862 million in 2020 compared to $476 million in 2019. Other operating expenses. Employment cost amounted to $273 million in 2020 compared to $233 million in 2019. Other staff costs in 2020 amounted to $84 million in 2020 compared to $60 million in 2019.
Go ahead.
Thank you. Other staff-related costs in 2020, this amount was $37 million compared to $62 million in 2019. Administrative expenses in 2020 was $177 million. In comparison, for 2019, this figure was $94 million. Other repair and maintenance expenses. In 2020, the amount was $33 million compared to $50 million in 2019. Facilities and utility costs, which is primarily Nawec's own consumption of electricity and water. The amount was $57 million in 2020 compared to $114 million in 2019. Net effects of write-offs was zero in 2020, $221 million. That gave a total operating expenses of $661 million in 2020 compared to $834 million in 2019. The gross profit for the total operating expenses that I've just presented combined gave us an earnings before interest, taxes, and depreciation of $201 million in 2020. That is compared to a loss of $259 million in 2019. Apologies, $359 million. Depreciation and amortization expenses in 2020 amounted to $400 million compared to $803 million in 2019. The presentation of earnings before interest and taxation, that is a combination of the earnings before interest, taxation, and depreciation, less depreciation, is a loss of $199 million in 2020 and $1.2 billion in 2019. Finance income amounted to $1 million in 2020 and $1.4 million in 2019. Finance cost and interest amounted to $64 million in 2020 and $179 million in 2019. Effects of foreign currency transactions amounted to $88 million in 2020 and $24 million in 2019. Exceptional income in 2020 was $1.8 million and zero in 2019. This gave a total loss for the year 2020 of $349 million compared to $1.4 billion in 2019. The statement of financial position or balance sheet. That's in page 16. The total assets in 2020 for Nawec was $8 billion compared to $7.2 billion in 2019. The total current assets was 1.9 billion in 2020 compared to 1.9 billion in 2019. That gave a total asset of 10 billion in 2020 and 9.2 billion in 2019. Total capital and reserves in 2020 was 2.2 billion compared to 2.1 billion in 2019. Total non-current liabilities, these are liabilities that are due for more than 12 months, amounted to 5.4 billion in 2020 and 4.8 billion in 2019. Total current liabilities amounted to 2.4 billion in 2020 and 2.3 billion in 2019, giving a total equity and liability of 10 billion in 2020 and 9.2 billion in 2019. Thank you.
Thank you so much. The finance director, that is very clear. Let's face it. Going forward, Honorable Board Chair, with your permission, can we allow the external auditors to take us through the management letter and an opinion of your position and the opinion? We want you to take us through adverse audit findings and that of the prior year on resolved audit findings. So that are highly risk in nature. Please.
Good morning once again, Honorable Chair, other National Assembly members, Nawec, Board Chair, Management, and other colleagues. So starting with the audit opinion, which I believe is on page 5 of the report. Page 8, sorry. Page 8, yes. It's on page 8? Yes, go ahead. Okay, so in summary, based on the work carried out, the opinion given was a disclaimer of opinion. By that, I mean we could not express an opinion on the accompanying financial statements due to the significance of the matters that we found during the audit. So in explaining the points in summary, the initial point was the opening balance. We could not gain sufficient and appropriate audit evidence regarding the opening balances because they contain misstatements. So this is coming from the previous year, 2019. A disclaimer of opinion was given on certain aspects. so we could not gain the evidence to see whether that had been resolved or otherwise. Going on further, the next point is inventory. We found differences in the quantities that were stated on the bin cards compared to the year-end valuation reports. So based on the samples that we checked, looking at some of the stores, page 9. I think.
Yes, it's page 9, Honorable Chair.
In fact, I want to observe, can you increase
my
your voice a bit?
Okay.
And if you can take us through, you can...
do you prefer we read it, or
yeah, read it,
what do you want?
Read it in Babaji, yes.
Okay. Okay, so I'll start again. I think it's on page 8. Is the volume okay now?
Yes.
All right. So that's the independent external audit report for the perusal of the members of National Water and Electricity Company Limited. A disclaimer of opinion. We were engaged to audit the financial statements of Nawec for the year ended 31st December 2020. The said financial statements contain from page 15 to 24, which comprises of income statement, statement of financial position, statement of changes in equity, statement of cash flows, notes to the financial statements.
Where are you reading?
Page 8. Page 8. No, that's it. Isn't this
We're reading the financial statements, the opinion on the financial statements. So there are two sets of documents that we presented. The management letter and the financial statements. So on the financial statements, you should refer to page 8. That's where the report starts from. No, we're first going through the financial statements. And our audit report on those financial statements, page 8.
Okay, we are together.
We are together?
Yes.
Okay.
So I need to start again?
Sorry for that.
No, that's okay.
That's all right. Okay. So, independent external audit report for the perusal of members of National Water and Electricity Company Limited, Nawec. Disclaimer of opinion. We were engaged to audit the financial statements of Nawec for the year ended 31st December 2020. The said financial statements contain from page 15 to 24, which comprises of income statement, statement of financial position, statement of changes in equity, statement of cash flows, notes to the financial statements, summary of significant accounting policies. We do not express an opinion on accompanying financial statements of Nawec, due to the significance of the matters described in the basis for disclaimer of opinion section of our report. We have not been able to obtain sufficient appropriate audit evidence to provide a basis for an audit opinion on these financial statements. The basis for disclaimer of opinion, opening balances, that's the comparative financial information. We as auditors were unable to obtain sufficient appropriate audit evidence regarding whether the opening balances contain statements that materially affect the current period's financial statements. A disclaimer of opinion on those financial statements was issued on the following account balances, namely receivables, payables, revenue, and cost of sales. We were unable to obtain sufficient appropriate audit evidence regarding these matters by alternative means. Inventory, otherwise known as stock. We were not appointed as auditors of Nawec until after 31st December 2020, and thus did not observe the counting of physical inventories at the beginning and end of the year. We were unable to satisfy ourselves by alternative means concerning the inventory quantities held at 31st December 2020, which are stated in the statement of financial position. Furthermore, there were differences found between quantities stated on bin cards compared to those recorded on the year-end valuation reports. In some cases, The items concerned are understated and others overstated. There were stores Kotu C and D, Bansang, Farafeni and Basse, showing inventory items with quantities on the year-end stock take report. The inventory values for those stores were not captured in the valuation report, thereby completely omitting them from the general ledger. In certain instances, some inventory items in good condition indicated year-end quantities in the valuation report. However, there were no prices indicated against them, making them show a zero value. This has the effect of gross understatement of the stock balance. Other instances revealed an issue of wrong stock pricing, accumulating to the understated sum of $42,947,755. Should this analysis be carried out using data for all the store locations, the understated amount would be far greater than this. Trade receivables. The billing system, Galati, and accounting system Access are separate standalone systems. The Galati billing department generates invoices for electricity, post-paid customers, water, and sewage. Payment receipts are generated and manually recorded in the general ledger, Access accounting system, to determine the receivables figure. The manual recording of high volume of data creates room for material error caused by omission, misstatement, or transposition. Our audit noted a difference between the billing arrears report from Galati and the trial balance figures for trade receivables, with the latter being understated by $117,568,359.60. No plausible reason could be provided. Independent audit confirmations were sent out to customers, but no responses were received to confirm majority of the balances. Audit tests comparing customer statements with output from the Galati system showed large differences in various accounts. We conclude, therefore, that due to the uncertainties, reliability cannot be placed on the billing system Galati that was in use, and the receivables balance reflected in the books of Nawec. We were also not provided with appropriate supporting evidence for the Ajib loan service connection of $19.9 million included in Note 8.16 of the financial statements. Cash and cash equivalents. Bank reconciliation statements for 10 bank accounts were not provided with a total value of $173 million. There were many long reconciling items appearing on the bank reconciliation statements, such as stale checks of over $18 million were identified on some of the bank reconciliations prepared spanning from 2019. There were also uncredited lodgements of over $15.9 million, still not deposited into the account of Nawec as far back as 2019. Supporting documents to explain or substantiate those reconciling items were not provided. Should these reconciling items be cleared, it is likely to have an impact on other account balances in the financial statements. External loans. Based on the provided information, there was an overall outstanding balance of $4.7 billion, Note 8.19, owed by Nawec to various lenders, 6 external and 1 local, at the end of the reporting year. These are long-term liabilities payable between 10 to 20 years. The outstanding balances in the accounting schedules did not capture the applicable interest element, which is cumulatively in the region of $7.6 million per year. Furthermore, no evidence of account reconciliations for each long-term liability was provided by Nawec to confirm the exact amount owed to the sublender of these loans, Government of the Gambia. Due to the materiality of these amounts involved, the absence of periodic reconciliation meetings, it would be unreliable to give credence to these amounts. Property, plant, and equipment. The asset manager, a standalone system, is used to capture details such as the date of purchase, asset description, cost involved, and so on of all assets purchased by the company. the depreciation should also be calculated using this software. However, our audit test highlighted that the reliability of the information generated by the platform is questionable. Based on our computation of the depreciation expense for the year, an overstatement of 13.3 million was noted in the calculation. Revenue. The audit carried out a reconciliation on the expected sales connection amount generated for the year using Nawec source data. The expected amount was compared to the amount reported in the general ledger. A difference of $236,479,109 was noted, which could not be explained. Other audit tests could not be carried out due to limitation of the billing system in generating historic data of transactions posted. The responsibilities of management and those charged with governance of the financial statements. The directors of Nawec, by delegation to the management, are responsible for the preparation and fair presentation of the financial statements in accordance with local generally accepted accounting policies, GAAP, best practices, and applicable laws in the Gambia. It is permissible to apply mechanisms such as internal control as management determines it's necessary to enable the preparation of financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statements, management is also responsible for assessing Nawec's ability to continue as a going concern, disclosing as applicable matters related to going concern and using the going concern basis of accounting unless management either intends to liquidate the company or to cease operations or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the company's financial reporting process. The auditor's responsibilities for the audit of the financial statements. Our responsibility was to conduct an audit of Nawec's financial statements in accordance with international standards on auditing and to issue an auditor's report. However, because of the matters described in the basis for disclaimer of opinion section of our report, we were not able to obtain sufficient appropriate audit evidence to provide a basis for an audit opinion on these financial statements. We are independent of Nawec in accordance with ethical requirements that are relevant to our audit of the financial statements in the Gambia. We have fulfilled our other ethical responsibilities in accordance with these requirements. Our firm is in compliance with the International Ethics Standards Board for Accountants Code of Ethics for Professional Accountants, IESBA code, the legal and regulatory requirements. The financial reporting framework that has been applied in the preparation of the financial statements comprising of locally enacted laws and applicable accounting standards outlined. We have read all the financial and non-financial information during the audit to identify material inconsistencies with the audited financial statements and to identify any information that is apparently materially incorrect based on or materially inconsistent with the knowledge acquired by us while performing the audit. If we become aware of any apparent material misstatements or inconsistencies, we consider the implication for our report. Signed by myself, Joseph Victoria George, a partner of Next Year Pace Consulting.
Thank you for the opinion. Can we go to the findings that are highly
Can I proceed?
Yes.
Okay.
Can you take us through the pages?
Okay. So this is the other report, which starts on page 11. Page 11. Yes, we are. Just to clarify, would you like us to just do a summary of the key issue?
Yes. Yeah, the key issues that are highly risky.
Yes.
High priority.
Okay, just so we're on the same page. Okay, so page 11 is the first point to talk about, which is governance. So this, in summary, it's just the declaration of interest that is covered in the board charter. We realized that this was not being done annually for board members and staff. So we just felt that this is something that needs to be brought to the attention of management so that it can be captured. That's A. B.
Yes.
There was staff training in with Nawec, which we just feel it's a governance issue that needs to be dealt with. And the C was the minutes of meetings, because we had some minutes that were not provided to us. So these were the key things that are captured under governance. Okay. So going on to the next point, which is page 15. So page 15, that's internal audit. Yes, please.
Can we at least adjust on the format of presenting these areas? If you can read, because after the observation and recommendation, I think the management also need to respond.
Okay.
Yeah, so we want you to read so that all of us can hear, even though we have the report.
Okay, so we read verbatim.
Yes.
Okay.
Focusing on the high priorities.
Okay. 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 So again, I'll start again with page 11, which is governance. Okay, so the ranking is 1, which is a high priority. Observations relating to the governance were made on the following areas. That's A, declaration of interest. There is a declaration of interest policy guidelines in place, captured in the board charter. Such declaration should be made annually by board members and staff. There was no evidence obtained to show that those serving on the Nawec board and staff made a declaration for any potential conflict of interest with the company. B, staff training with Nawec. Evidence gathered showed a current full-time member of staff training with Nawec and awarded with contracts totaling $1 million in 2020. The staff concerned is the registered owner of the company, Kuti Jumbo Electrical Engineering Services. Minutes of meetings. A salient point noted from our review of the board minutes was the non-settlement of Castle Oil invoices. That's the supply for heavy fuel oil. which caused strains in the relationship of Nawec and Castle Oil. The non-settlement was due to breaches of contractual obligations. However, an update was not captured in the minutes of 17 November 2020, apart from mention of Castle Oil's contract being cancelled. Board subcommittee minutes were requested for, and only the following were provided. One, for the Procurement and Compliance Committee, minutes of only 2 meetings held in December were provided. For the Finance and Audit Committee, only 1 minute was provided. 3, only 1 set of minutes was provided for the Human Resources, Remunerations and Appointment Committee. This is an indication that Nawec has an issue of proper record keeping with such important documents not available for review when officially needed. The risk implications? The possibility of board members and staff using their privileged position to trade with Nawec may go unnoticed if safeguarding mechanisms are not put in place to monitor their commercial interest, if any. B, the contract value of 1.036 million received by the staff exceeds his annual salary. Not only does this practice expose the internal control weaknesses at Nawec, it makes staff not to be committed to the work of the company, but to promote their own commercial activities at the expense of their employer. C, a flaw in the documentation system capturing and retention of board subcommittee minutes will make future references to decisions taken an impossibility. Recommendations. A, Nawec should review its policy on declaration for conflict of interest. Declaration should be made annually by all board members and staff. Be awarding staff private contracts for work that they are employed to do is grossly unethical and must cease immediately. The internal audit department of Nawec must be proactive to be able to detect such irregular practices. C, minutes of meetings, main board and subcommittees must be taken and made available for review and future references. The benefits. Making annual declaration for conflict of interest will help Nawec to determine whether the individual is better suited to serve in the capacity of a board member staff or goods stock services provider. Reliance could be placed on the minutes and implementation of action points undertaken when they are made available.
Management response. Comment from Nawec.
Mr. Chair, with your permission once more, I would like to ask our group finance director to respond.
Thank you, Mr. Chair.
No. Yes, go ahead.
Comments from management. On the A, management acknowledges the fact that the board charter, which is for the board members and the service rule for staff, needs to be updated to require annual declaration of interest by board members and staff. Management has kicked off a process to update both the board charter and service rule to roll out a request for declaration of interest for all staff and board members during 2020. And B, management would like to inform that the issue of the staff of Nawec trading with Nawec under the company name Putajumlo Electrical Engineering Services was raised in 2022 by management of the Electricity Business Unit and brought to the attention of the managing director. The staff in question was consulted and the issue of conflict presented. Based on the outcome of those engagements, the staff was granted leave of absence without pay from Nawec. Management has since reviewed this and clearly understands that the issue is not resolved by the leave of absence as the staff remains in Nawec's employment. A decision has therefore been taken to present the following options to the staff in question. Staff will be given the opportunity to terminate his employment with Nawec, or Putajumlo Electrical Engineering Services be barred from doing business with Nawec. The staff has already communicated his decision to resign from the services of Nawec. we mentioned in C, is recognized by management and significant measures have been taken to regularize the issue of documentation of board minutes with the appointment of a company secretary with a legal background.
The auditor's note, we were not privy to any Nawec internal report on insider trading on arriving at our finding. Insider trading is an extremely serious matter, and Nawec should be seen to eradicate the practice sooner rather than later, not only with the staff vendor identified in the report, but from other potential culprits. The next point is on page 15, that's internal audit. So page 15, internal audit. The ranking is a high priority. The observations. From our review of the internal audit department, the effectiveness stroke impact of the department is not felt on the operation of Nawec due to the following reasons. Bullet point 1, assurance was not provided on the latest business priorities. That's A, the achievement between strategic success and effective risk management. B, governance to promote a more transparent and challenging culture in the organization. C, effectiveness and efficiency of operations and value for money. D, information technology risks. The second bullet point, audit work on high-risk areas were not carried out on A, general ledger, that's call over, taking into account the number of posting, errors seen, and reversals made. B, bank reconciliation statements review. C, review of payment vouchers. D, revenue. E, payroll. There were high-risk areas identified by the external audit, which we carried out, but evidence that work was done by the internal audit department was not provided. Examples of these are A, fixed asset verification. That verification was only done on vehicles and motorcycles. The other assets of Nawec were not covered. B, loss control. That's cost and revenue, no work done. C, bank reconciliations. It was indicated in the situation report dated 21st of December 2021 that work is ongoing, but evidence of completion was not provided. The working paper files of water production treatment and the fuel internal control reports were reviewed. However, the working paper files contain only the final reports, including the responses of the auditees, observation sheets, and an audit program in the fuel internal control file. However, audit evidence, which is the information or documentation used to support the audit findings and conclusions, were not in file. All audit files should be arranged in chronological order files and referenced for ease of review. The internal audit manual was approved since 2012. The date it was last updated is not indicated on the document. Considering that many new systems have been introduced at Nawec, it is imperative that the manual is updated in line with practices. Furthermore, section C.1.1 and C.1.2 of the IAM states that review and approval of the work plan should be done by the Internal Audit Committee or Managing Director. Amendments can also be made by the Internal Audit Committee or the Managing Director. However, the MD should not be involved in such process, as his objectivity and independence could be obscured. Evidence of training being conducted during the period was not provided. The risk implications. An ineffective department lacks complete and objective insight into the effectiveness of their risk management, internal control, and governance processes, as well as the evaluation and improvement. Recommendations. With the implementation of a new system, the internal audit department should have been tracking the efficiencies of the system and measure its results. This can include the ability to process more orders in a day, reduction in hourly wages paid out for overtime, or others. The work of the department should be better structured by the directorate itself. There should be a systematic way of how work is carried out to ensure efficiency and effectiveness. The department should be equipped with appropriate tools and trained on the latest technology and new initiatives of Nawec. That will make risks posed by new threats to be known. New policies and technologies will also be known, and the department can assist management to protect the organization from financial losses. Training should be carried out for all staff, and a log maintained to show record of training conducted. The annual work plans prepared should be reviewed periodically, and should there be a need to change, then this should be done. Focus should be on high-risk areas. Comprehensive reports should be prepared and are concise to capture the attention of readers rather than it being monotonous. Comments were not always provided by the auditees on the draft reports submitted. The benefits: an independent, objective assurance and consulting activity will add value and improve a company's operations. It will also help Nawec accomplish its objectives by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of risk management, control, and governance processes.
Comment from Nawec? Once again, Mr. Chair, I would like to ask our Group Finance Director to comment.
So reading out the comments from Nawec. The Nawec Internal Audit Directorate mission and strategy is designed to enhance and protect Nawec's value by providing risk-based and objective assurance, advice, and insight into operations. This is done with clear mandate as stated in its internal audit charter approved by the board. The unit uses the International Professional Practices Framework and other tools as guidance in its audit work. The internal audit plan is a flexible plan that includes high-risk audit areas to be conducted. The plan is reviewed monthly, weekly, with the managers and team leaders of the progress of work done, and progress reports are provided and submitted to management and audit committee. The internal audit directorate has its business plan and key performance indicators, which are derived from the company's strategy. Monthly KPI reports are submitted to the group projects and planning department, and quarterly reports on audit work are reported to the audit committee and management. Internal audit work are all documented in the standardized audit working papers that we use. This approach is used to gather evidence and document work done and conclusions reached by the auditors. This provides evidence that sufficient information was obtained by an auditor to support his or her conclusions on the controls and the risk management. We agreed there is need for improvement on our working papers, and we are aware of this, and we will work on this for improvement. The internal audit manual is included in 2023 plan to be reviewed and updated. However, the government of the Gambia, through the Directorate of Internal Audit, secured funding to build the capacity of SOE internal auditors through support of the World Bank funded Fiscal Management and Development Project of the Ministry of Foreign Affairs. Ministry of Finance, MOFIA. As such, CREST Consulting has been contracted to support Nawec in undertaking to develop internal audit manual, internal audit charter, and training of internal audit staff. We agree that more training needs to be conducted. The internal audit annually develop a training needs assessment, which is submitted to management through the Human Resource Department Directorate. Some of the staff are undergoing professional courses like CIA, ACCA, etc. 2 internal audit staff returned from overseas studies after obtaining their MBA and 1 BSc in electronic engineering. 1 staff is undergoing training in computer science.
The auditors note the responses provided by the Nawec Internal Audit Department are theoretical and descriptive in context, not addressing practical anomalies from confronting the company. The role of an IAD is to proactively identify potential risks, make recommendations for improvements, and make follow-ups to ensure that they do not reoccur. These have been absent at Nawec in financial year 2020 and beyond. The management of Nawec should on its part aim to strengthen the internal audit directorate for their efforts to enhance the overall weak control environment in the entity. We note the opportunity given to staff for their professional development. However, the effectiveness of these staff will only be realized if they are given on-the-job training to resolve Nawec's internal control problems. So moving on to the next point, which is on page 23.
20.
No. 20.
3.2. Health and safety variance analysis.
Honorable Chair, if I can just step in here, you did mention that we pick on the salient points to report on the ML. We are happy to do that, but alternatively, if you want us to read the entire management letter, we can do so as well.
No, in fact, the high-risk areas, that's what we are going to be captured. But if you make observation, probably with regards to the actual heading, you can go into the implication. Just you go through this implication and develop the recommendation. From there, they respond with the benefit that they can respond and we further it.
No, let me clarify. Do you want us to read all the points captured in the management letter?
No, don't have that. I think it's going to consume a lot of time.
So just priority one, high-risk areas?
Yes, high-risk areas.
Okay.
That's the high priority line.
Okay, so that's on page 20. That's health and safety. Health and safety. Yes. Okay, the observation. The external audit team was made to be aware that steps have been taken to introduce a health and safety policy, as well as getting it enforced across the company. Currently, there's no policies or guidelines on how avoidable accidents can be mitigated. Visits were made to the sites at Brikama Plants 1 and 3 and Koto Power Station, where we observed that there was a lack of protective gear such as helmets, overalls, electric insulated voltage gloves, dust masks, eye protection, and so on, despite these items included in the budget of Nawec for 2020. There are only a few fire extinguishers scattered around the administrative building. However, those fire extinguishers are not regularly tested or refilled for effective use. The date of when the last test was carried out is not known. Evidence of a fire drill being conducted was also not provided. The risk implications: failure to install adequate health and safety procedures can result in serious injuries or fatalities. A poorly managed health and safety system is a ticking time bomb which could result to legal ramifications and cause damage, both financially and in terms of the company's reputation. In addition to meeting legal obligations, a failure to provide this duty of care can not only be harmful to a company's employees, but also prove costly to Nawec's productivity and profitability. The recommendation, a health and safety policy should be developed, approved, and rolled to all staff within 6 months. Safety drills should be carried out regularly and observations on lapses documented for improvements. Personal protective equipment or gears should be provided immediately to all staff working in hazardous areas. This measure should not wait for a health and safety policy to be approved. Institute a fire drill program for all facilities, office buildings, power stations, storage facilities, and train staff on basic health and safety at work. Nawec should ensure against work-related injuries for staff. Compensation currently being offered is inadequate compared to legal damages if Nawec was to be sued by employees or customers. Staff should also be offered life insurance policies to mitigate the impact of loss of loved ones, especially the ones resulting from work-related accidents, especially in the electricity division. The benefits: when there's so much at stake, an effective health and safety management in the workplace is in the best interest of both employees and the employer. It's important, therefore, to ensure employees enjoy the best possible protection while in employment.
Comment from Nawec.
Comment from Nawec. Management acknowledges the fact that there is currently no formal policy in place for health and safety. This is one of the issues identified as important for the restructuring of Nawec, and fortunately, the process has advanced. Nawec has successfully recruited a health and safety senior manager who started December 1st, 2022. The plan is for this position to lead a comprehensive approach to health and safety management for the company, including policies, procedures, reporting, and monitoring. Management acknowledges the fact that these health and safety items were included in the approved budget for 2020, with the goal to implement. However, after this approval, the company was granted donor funds for the procurement of personal protective equipment for its operations, and the internal procurement process was suspended to avoid duplicate and save internal funds. Unfortunately, the procurement process for the equipment from the donor funds took a while, and the equipment were received the second half of 2022. Management acknowledges that the issue of fire safety needs urgent attention. While we wait for the health and safety senior manager, actions have been taken in 2022 to equip key power stations, with fire extinguishers, and a company has been contracted to ensure these are regularly tested. Management has further included in the budget for 2023 funds to equip the power stations in Bikama, water and sewerage facilities, and head office with fire extinguishers. This will be implemented as soon as the budget is approved for implementation in 2023. Management acknowledges the fact that there is currently no emergency plan. This is included in the terms of reference of the health and safety senior manager, and we expect this to be one of the priority areas to be addressed in 2023.
So, on the stated revenue, the observation, a recomputation of the sales bill collection figure was carried out using source data, such as Suprema reports for the entire year, which captures all prepaid cash power sold, and the Gality report, which captures the postpaid bills generated. The expected total sales was compared to the amount reported in Nawec's general ledger. A difference of $236,479,109 balances on the statement was noted based on our computation of the income figure. The expected sales figure was compared to the sales figure recognized by Nawec in its accounting records, and trial balance amount recorded was lower. The risk implication. Unreconciled differences could result to a misstatement in the revenue reported, thereby distorting the view to users of the financial statements. Difficulties would also be experienced in analyzing and managing the liquidity position of the institution. The recommendation: reconciliation should be carried out to check the completeness of the sales figure reported. The reason for any difference in the expected sales figure should be investigated and resolved. The benefit with the required corrective actions taken, reliance will then be placed on the reported revenue figures.
Comments?
Management acknowledges the fact that this reconciliation should have been done not only monthly but also after the year end for the full year. We would like to highlight that reconciliations are performed monthly. Unfortunately, the old system for billing allowed retrospective adjustment of revenue amounts if an error is identified. This leads to the risk that even when a reconciliation is done for a particular month and the customer service and finance balance reconciled at the time, subsequent adjustments may be done by both the finance and the customer service team for the period already reconciled. The annual reconciliation, in addition to the monthly reconciliation, would have captured and corrected this error before the audit. Management notes that this issue is now a thing of the past with the implementation of the new IMS system, which has controls not only which has controls to not only prevent retrospective adjustment of historical data, but also transmits data between the two systems through an integration that requires no human intervention.
The external audit received no evidence affirming that monthly revenue reconciliations were carried out at Nawec in 2020. A post-audit reviews confirmed that there are perennial and continuing issues relating to revenue which have not been addressed. A thorough reconciliation process, if any, would have detected anomalies raised. Revenue is a major area which continues to adversely affect the company's liquidity position. So going next to contract management, yes. Okay. That's on page 27. The observation. A review of a sample of contracts highlighted the following deficiencies. 1. 100% payments by Nawec to suppliers before the delivery of goods or services not protected by an advance payment guarantee. A summary of the suppliers affected is listed. The second bullet point. So, yeah, we're not, yeah. So a summary of the contracts awarded was on the 12th of June 2020. That's the supply of service connection materials. That's the BB Electricals, of 6.3 million. The next is on the 15th of December 2020, purchase and supply of urgent spares for G5. That's Burmeister and Wayne, Scandinavian contractor. That's euros 42,000, equivalent of $2.7 million. On the 29th of June 2020, supply of spares for G6 and supply of fuel oil booster unit. That's to Burmeister and Wayne, Scandinavian contractor. That's euros 89.9 thousand euros, equivalent of $5.3 million. On the 11th of September 2020, supply of turbo materials, that's to Man Energy Solutions in Senegal, that's euros 84,119,000. And then the second point with the BB Electricals, it was stated on the signed contract that delivery of items should be within 2 weeks. With the contract signed in June 2020, some of the items were not delivered until November 2020, which was well beyond the agreed delivery timeline. No clause was included in the contract to protect the interest of Nawec for late delivery. An order was placed with Procurivis International Limited in October 2020, but delivery of the item was much delayed. It resulted to another order being placed for the same item in December 2020. Procurivis is an agent or middleman. Nawec failed to purchase directly from the manufacturer. The poor quality of procurement contracts signed by Nawec opens the floodgates for wastage and poor liquidity management. The risk implication, all three contracts were clearly breached by the mentioned suppliers. In the case of Procurivis International Limited, it forced Nawec to duplicate its expenditure by placing another order for the same items to avoid further delay to their work. The practice of making advance payments 100% especially risk Nawec losing a substantial amount of money should the supplier go bankrupt or face serious liquidity issues. Overall, the rules practiced at Nawec in the manner contracts are awarded and monitored clearly undermines liquidity management and the internal control mechanism. The recommendation, all advance payments must be backed by an insurance cover or bank guarantee. Nawec must embark on a practice of eliminating middlemen and purchasing directly from manufacturers using their huge buying power. Since Nawec has an exemption from channeling their purchases through Gambia GPPA for approval, the company should create a list of properly vetted suppliers who are reliable and trustworthy. The interest of Nawec will be protected at all times. The risk of wastage, tied down liquid resources, and delays would be eliminated.
Comments from Nawec. Contract management. The practice of paying 100% advance to suppliers is an issue of past and is linked to the history of Nawec's credit rating with all its major suppliers due to lack of payments. The situation improved significantly in 2021 when Nawec worked to clear a good portion of its aged liabilities to suppliers. The issue of advance payment is now primarily experienced with overseas vendors and is almost always 50% advance and payment, 50% advance payment and 50% upon delivery. With regards to the recommendation for advance payment guarantee, management will consider this under the current situation to assess if it is still relevant given the changes discussed above. An important aspect of this assessment will be the cost of this added security compared to the benefits and availability of such security guarantees for overseas vendors in the local market. Nawec has not had an exemption from GPPA regulations in 2020. Nawec will continue to follow the GPPA procurement regulations for procurement of goods and services.
The auditors note the will to address the risk posed by advance payments is recognized. However, the risk of default by suppliers continues to exist, irrespective of whether the supplier is local or foreign. Nawec does not apply the cushion of bank guarantees for advance payments to be provided by vendors. The next high priority point is the control environment on page 31. 31, yes please. An assessment of the control environment was carried out through expenditure vouching on a sample of payment vouchers, and the following lapses were highlighted. 1, 3 quotations were not obtained in line with GPPA procurement guidelines. The summary is on Appendix 1. B, there were local purchase orders not raised on Appendix 2, the summary. C, supporting documented receipts were not attached to the PVs raised. That's on Appendix 3, summary. 4, goods received notes or service delivery notes were also not raised in some instances. That's Appendix 4. 5, that's cash signing sheets not signed by recipients of allowances. The summary, again, is on Appendix 5. The risk implications. Inadequate controls have the potential of increasing the overall risk of the organization. In the event of a dispute arising where source documents would be required, the institution could be in a very difficult situation to redeem itself. The recommendations, a minimum of 3 quotes should be obtained from the list of reliable suppliers and evaluated prior to a decision being taken on which supplier to use. Local purchase orders should be raised and authorized. Supporting documents should also be filed for future reference. All deliveries of goods should have goods received notes completed and signed off. Services fully rendered should have a service delivery note also completed and signed off. The benefit? The control environment would be strengthened, thereby minimizing losses overall.
Comments from Nawec. Control environment. 3 quotations not obtained. Nawec strives to comply with GPPA procurement regulations. The general rule is to obtain 3 quotations for requests for RFQ procurements. However, procurements done on emergency basis, like transformers, electrical materials for replacements, may occur through single sourcing. The same also applies to specialized materials or services for vehicles procured from specialized dealers. LPOs not raised, quotations not raised. Management would like to assure the auditors that all procurement should be initiated by the procurement department through OPOs, LPOs, or by email sent to the vendors. Management acknowledges the fact that the sample selected by the auditors for this testing may have included some vouchers for which the proof that the purchase was initiated through a formal request from Nawec provided. The auditors would be pleased to know that the IMS system provides mitigation for future occurrence of such discrepancies, as the procurement to pay process is fully integrated into the system and documents are digitalized, tagged, and attached to the transactions in the system, therefore eliminating the issue of misplaced documentation. Supporting documentation, payment receipts not attached to the payment vouchers. Management acknowledges the fact that requesting for receipts of payments from vendors when issuing checks for payments was not practiced. This followed the procedure of the vendor. Some vendors gave receipts and some vendors did not have this practice. The auditors will be pleased to note that the use of checks as a primary method for vendor payment has been significantly reduced after the IMS went live in October 2021, and the completion of the banking restructuring process on all payments as a primary rule must be paid using online bank-to-bank transfer. This includes all payments for salary and related payments. Management would like goods receipt notes not raised. Management would like to assure the auditors that all payment requests to finance must be accompanied by GRNs or SRS, or memos confirming goods or services received prior to payment. Management acknowledges the fact that samples selected by the auditors for this testing included some vouchers for which the proof goods services received confirmation was not attached. The auditors will be pleased to know that the IMS system provides mitigation for future occurrence of such discrepancies, as the procurement to pay process is fully integrated into the system and documentation are digitalized, tagged, and attached to the transactions in the system, therefore eliminating the issue of misplaced documentation. All procurement initiated in the system through a purchase requisition must have a fully authorized purchase order and a system-generated goods services received note. With these in place, the invoice when received will be posted using the system-enabled three-way match and must perfectly match for the invoice to be posted for payment. Cash signing sheets not signed by recipients of allowances. Management acknowledges the fact that a lapse existed where payments to staff made manually through checks or cash payments were not supported by duly signed sheets documenting the confirmation from the right staff that the cash was received. The auditors will be pleased to note that the use of cash payments to staff was ceased in 2021, and as of 2022, all payments to staff are made directly into their bank accounts. This includes all payments for salary and related payments.
The next point is on HR lapses, page 35. The observation. The following observations were made on human resource management as part of our holistic audit review. 1, targets were not set for staff in 2020, and therefore no performance appraisals could be carried out on them. 2, monthly headcount not conducted by Human Resources Department. This regular exercise makes it possible to detect and eliminate ghost employees. Rather, reliance is placed on the records of the Finance Department, which may have been inaccurate from the outset when provided to them. C, some operational staff were still receiving monthly emoluments by cash during 2020. Evidence gathered in April, July, and August that year revealed that an individual will be permitted to collect the wages of up to 5 colleagues without authorization. Risk implications. Without targets being set and performance appraised, the delivery of staff cannot be measured against any benchmark. Where there are needs for improvements for corporate objectives to be achieved, it will not be realized on the staff and areas concerned due to the absence of a performance mechanism. Lack of conducting monthly headcounts considering the size of Nawec could result to payments being made to post workers, resulting to a massive waste of liquid resources. Disputes could arise that those wages were not received by the person concerned due to lack of written authorization when cash was collected. The recommendations: targets should be set for all staff and appraisals carried out annually in line with the staff service rules. Staff required to appraise their subordinates should be trained on the skills and techniques of how to measure performance in comparison with set targets. Headcount should be carried out monthly. Figures should then be reconciled with the staff numbers as per the finance department records. Differences should be investigated and corrected immediately. Wages should only be paid to the staff concerned and not to a third party. The benefits? Staff will be rewarded based on merit and performance rather than longevity of service. Areas where training and development is required would be identified. The possibility of paying ghost workers will be eliminated. Now its resources could be better utilized on areas that will generate revenue.
Comments from Nawec. Management acknowledges the fact that the policy and practice of performance management was not in place in 2020. This is one of the issues identified as important for the restructuring of Nawec, and the process was kicked off in late 2019, which started with the performance contract between the government of the Gambia and Nawec, signed in 2021. The process continued with setting up of performance targets for all directors derived from the performance indicators in the performance contract for the review of directors who are in contract-based appointment with Nawec. Those are all except the MD and DM. Parallel to this process, the drafting of performance appraisal policy was ongoing. The final draft was approved by the Board of Directors in the third quarter of 2022 for implementation from 2023 for all Nawec staff. Training of directors, senior managers, managers in performance-based management, and performance appraisal was conducted in November-December of 2022. Management acknowledges the fact that Human Resource Directorate has not conducted staff headcounts in 2020. Management also acknowledges the need to initiate a process for mapping and accounting of all staff.
The next point is on property, plant and equipment, which is on page 38. Page 38. So the observations: 1, validating the fixed asset schedule in financial statements require reconciliation to be made with the detailed comprehensive asset register. Among the information in the detailed register will be the holistic listing and assets at historic cost, depreciation history, and net book value. This information, when amalgamated with the additional cost of fixed assets purchased during the year, will ensure an accurate and reliable amount is reflected in the financial statements. A detailed or comprehensive asset register was not provided by Nawec to verify the authenticity of the brought forward figures for the 2020 audit. 2 significant differences were noted between the trial balance and fixed asset schedule in the following categories. $3.5 million was understated, affecting primarily the plant and machinery and electricity network categories. The transfers from capitalized work in progress to these asset categories failed to reconcile by this amount. A depreciation or amortization charge of $400 million was recognized in the financial statements as opposed to $389 million calculated based on Nawec's policy of calculating such costs from the month of purchase using the applicable rates. The higher depreciation amount recognized by Nawec created an unexplained overstated amount of $13.3 million. 3. The value of Nawec's ongoing projects under implementation are supposed to be capitalized as a work in progress, releasing the same amount treated as a deferred capital grant. For each project, the sequence of events that's value grant disbursed and utilized should be up to date and properly documented for both tracking and accounting purposes. The audit exercise determined that ongoing projects in Nawec were not properly tracked, making amounts stated on the WIP and deferred capital grants reliable. For Nawec being a heavily asset-based company, has no history of a fixed asset impairment review exercise had ever been undertaken as required by accounting regulations. 5, assets are neither tagged nor linked to the fixed asset register for control and tracking purposes. 6, a fixed asset verification exercise was also not carried out during the year. Risk implications. 1, the non-availability of detailed or comprehensive fixed asset register is a major contributor to doubt the authenticity of asset values in the statement of financial position, otherwise known balance sheet. 2, problems of fixed asset figures authenticity is further compounded by the unavailability of intangibles and work in progress backup reports and documents. 3, it is unreasonable to expect reliance to be placed on the values of property, plant, and equipment, fixed assets, citing the significant unreconciled differences of $345 million and $13.3 million, respectively, for plant and machinery and electricity network combined. Rather, to the previous page. Please refer to the previous page for breakdown. 4, Nawec not carrying out the mandatory exercise of fixed asset impairment review annually or biannually risk having its assets significantly overstated, citing their high usage, which may require the depreciation to be accelerated. 5, there is a high risk of assets being missing without trace or not being detected early due to non-tagging. Recommendation 1, Nawec must create a detailed and comprehensive fixed asset register if reliance is to be placed on the value of their property, plant, and equipment. 2, the company must routinely reconcile the accounting schedules for each category of asset with the financial statements for further reliance to be placed on the figures presented. 3, every project that is completed and the assets transferred into Nawec's infrastructure contingent must be documented and properly amalgamated into the company's financial reporting system. 4, it is strongly recommended that Nawec must carry out a fixed asset impairment review exercise, not beyond every 2 years, annually according to accounting guidelines. 5, all assets of the company must be tagged and linked with the comprehensive register. 6, a fixed assets verification exercise should also be carried out of all assets and a report prepared at conclusion. The benefits. The significant issues being factors to Nawec's property, plant, and equipment figures not to be relied on will be eliminated with a root and branch improvement of this part of the financial statements.
Comments from Nawec. Management acknowledges that the fixed assets register, which was in use in 2020, unfortunately was not fit for purpose. This is because Nawec finance staff and the consultant who supplied the system to Nawec did not have the knowledge of how to extract a detailed, comprehensive asset register from the system. This was one of the material weaknesses in the accounting system which prevailed at the time, which also informed and partly triggered the restructuring of the entire information management system of the company. We are happy to report that the new system went live in October of 2021. And with the help of the consultant who worked on the implementation of the new system, Nawec was able to extract data of the detailed asset register from asset manager for migration into the new system. Unfortunately, this extraction was done with data as of October 2021. Management refutes the claim from the external auditors that there were material differences between the schedules provided and the trial balance. What happened regrettably was the auditors were provided with an older version of the schedule, which was not updated after journals have been posted. This was clearly explained to the auditors, and the errors corrected, and a new schedule provided to them prior to the end of the full year. Management acknowledges the fact that a fair value assessment of the fixed assets has not been conducted in 2020 in line with IFRS, and will endeavor to implement this prior to the audit of 2022. Management acknowledges the fact that an exercise to verify fixed assets was not carried out in 2020. This process was carried out in 2022 for assets procured in 2021 and 2022. and will continue subsequently assess the possibility of verifying assets procured prior to 2021, depending on the availability of resources.
The auditor's note.
Auditor's note. Let's keep that.
So going to the next point is
46.
Page 46,
inventory quantities and value. Observations. Based on the audit test carried out on inventory, the lapses that came to light are highlighted below. 1. Differences were found between quantities stated on the bin cards compared to those recorded on the valuation reports. In some cases, the items concerned are understated and others overstated. 2. There were also stores code to C&D, Bansang, Faravani and Basse, showing inventory items with quantities on the year-end stock take report. However, these stores were not captured in the valuation report, thereby completely omitted in the general ledger. 3. Furthermore, some instances were seen of inventory items indicated with year-end quantities reflected on the valuation report. However, there were no prices indicated in the valuation report, thereby showing a nil value. This would also lead to a misstatement in the inventory balance. 4. An issue of wrong stock pricing was also observed as a sample of inventory items were wrongly priced, resulting in an overstatement of the stock. 5. Compounding the inaccuracy of the Nawec stock figures was the absence of an automatic system integrating value. Absence of an automatic system integrating inventory values with the accounting system. 6. The net effect of the stock issues was an overstated sum of $42,947,755 amount in the financial statements, less than the inventory overall balance. The risk implication: differences in quantities and values of stock cards and the ledger may lead to unauthorized movements of items from the stores which may go undetected. Nawec users of their financial statements will be unable to place reliance on the information generated for use in the decision making, which could impact on the operations of the company. Recommendations: a regular internal reconciliation exercise should be carried out to resolve and avoid then future occurrence of quantity discrepancies reported in this report. Stock card errors detected should be reconciled with the financial statements. Updates should be made to the cost of inventory regularly. Steps should be taken to ensure that inventory is valued at the lower of cost or net realizable value. The benefits: and improved management of the stock system will place reliance on the financial records of Nawec. Transactions in the financial records would fairly represent the entity's financial positioning and actual operating activities.
Management on inventory quantities and values. Management acknowledges the fact that there are issues around the data entry of inventory items that need to be properly investigated and measures put in place